Hey traders, Jason here with a Day Trading Fearless. Welcome back to my channel. In this video, I want to show you guys what almost the perfect trade setup looks like using just pure price action, divergence. It's something that I look for and kind of tying in what I teach in my video course about divergence and all those the trade zones and all that. So there's a link down below if you want to check out my video course. It's 7 hours worth of content, $99, and it also comes with my E-mini weekly S&P E-mini trade zones. But let's jump into this video and look at what the perfect trade setup looks like. So I'm filming this on Sunday evening, March 12th. And the market just opened. The news came out with the Silicon Bank thing. It looks like crisis over, nothing to see. The Fed's creating some fun to make sure everybody gets their money. So keep going about your day. Nothing to see here, right? So price kind of opened, right? Sunday evening, sold off, rallied, right? Made a high, pulled back, made a higher high. Okay. And with this higher high, we could see there's divergence right here, right? So we have our divergence here with price making higher highs. We have a divergence here where the stochastic, and we're on the 1 minute chart, is making a lower high. That's what creates that divergence. So just think of it as a bullhorn, right? You got some guy shouting to everybody in the bullhorn going, hey, there's divergence going on, okay? And so what happens is what I'm looking for is what I call the kickback trade. And usually the kickback trade is where we get divergence, it sells off, and then we rally back up into a level and look for a potential short. Well, here's a perfect example of it, right? Look at what price did. And I'm just kind of using all these wicks. And if you guys see, I kind of drew a trade zone right here, a very micro trade zone. But here's the thing. One of the things that I really like about this trade is we have a low, a high, a higher low, right? And the higher high. But if you look right here at these two lows right here, okay, that is essentially the very last part of these higher lows, right? If I take a trend line and I draw them, actually that's probably the worst trend line, but essentially if I draw a trend line, we break down onto the other side of that trend line, right? And that actually shifts this low right here. The minute we take out this low, it actually shifts the entire market from being in an uptrend into a downtrend. And so what happens is we kind of break through, we have big red candles, and then we rally and we're making lower highs and lower lows, right? And then we see another divergence down here that we could have taken. And this essentially is our kind of line in the sand of if we break above there, okay, watch for a potential reversal on a maybe more micro side. But what happens is price rallies, right? So we could still make a lower high, pulls back, but then we make a higher high and we actually take out this high and actually this high. And so now the trend is actually a uptrend, right? And now the market has shifted again on a micro, but the bigger macro side, we're still bearish until this high gets taken out. So as price rallies, we pull back, we're making higher lows, right? We see it right here. We have a low here, a low here, a low here, a low here. And every time we make lows, we're making higher highs, right? But this trade zone is where I would want to take a short, and look at how I drew this trade zone. And I'm just kind of leaning into these wicks. I want to see price come up into these wicks a little bit. But if you look at this, and this is why I kind of drew my trade zone right here. There's a couple reasons if we actually zoom in to it. I drew it because we have body, right, wicks, but we have body, 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 wick, right, and then wicks. But I also actually took from this leg, right, of Fibonacci. And if you look, that gives us our 50% pullback, right, of this level. And price came all the way up, and that's where you would have taken the short. Stop would have gone way up here, okay, just or not way up there, but your stop would have been up above here, which would have been around 57, we'll call it 57 and a quarter. Your entry would have been right around 39.50, so you're risking about 7.5 points. But guess what? You actually had a reversal and it fell to 41. So that's 9 points of profit versus 7 points of risk. And it happened fairly quickly. But this is essentially the perfect trade setup that I look for. And I hope this video was really, really helpful. To kind of identify what to look for, right? Trade zones, I want to look for either swing highs, swing lows, supply and demand levels, things like that, that I can lean against to where price should kind of rally back up from a long move like this, because this has actually shifted the entire market to be bearish, right? We were making higher highs, higher lows. We first started here, but then when we took out this, now on the bigger time frame or picture, we've now making a high, a low, a potential lower high, and I won't be surprised if price kind of rolls all the way back over. And you could sit there and say, hey, I have 7.5 points of risk. Let me look for a bigger move of maybe 8 to 10 points or 15 or 20, or scale out. There are multiple ways. Maybe you target a low down here. Well, dude, that would be almost a 25-point move with only 7 points of risk. And watch this, right? We're making higher highs, higher lows this whole way up. But now if we take out this low right here, okay, this little low, if that low gets taken out, then on the micro time frame, the market has shifted from being bullish to bearish. And then we will have a high, low, lower high, and then a potential lower low. Let's say the next candle breaks down, and now we might start, the market shifts again and keeps going lower. So like I said, hopefully you guys find some value in this video. If you want to learn more about my trade zones, it's a one-time payment, $99, 7-hour video course, and you also get my S&P E-mini weekly trade zones that look just like this. They're updated every single weekend, and they are essentially support and resistance levels of where price should rally into and then potentially reverse. I just showed you on a very micro time frame, but I teach you how to draw these trade zones on smaller time frames. So again, links down below, or go to my website, daytradingfearless.com. But until next time, we'll talk to you soon.